Bitcoin surged to an astonishing $122,800 today, while Ethereum ETF inflows shattered records, exceeding $1 billion in a single day. What does this mean for the future of cryptocurrency? Let's break down today's pivotal events. As we look ahead, the future of Bitcoin and Ethereum remains uncertain yet promising. Recently, Bitcoin has experienced a remarkable surge in value, driven primarily by increased institutional interest, particularly in exchange-traded funds (ETFs). This uptick has ignited discussions about Ethereum's potential to close the performance gap with Bitcoin. The momentum surrounding Ethereum ETFs could signify a pivotal moment for the cryptocurrency market, as heightened inflows may reflect a broader institutional rotation towards Ethereum. Historically, Bitcoin has dominated the market, boasting the first-mover advantage, but Ethereum's unique smart contract capabilities and its rapidly expanding ecosystem may position it for significant growth. The rise of decentralized finance, DeFi, and non-fungible tokens, NFTs, has further solidified Ethereum's relevance in the crypto landscape, attracting a diverse range of investors. These innovations have not only enhanced Ethereum's utility, but have also drawn institutional players seeking new opportunities. Observers will be keenly watching for indicators on whether today's surge is a one-off event or the beginning of a sustained trend in institutional inflows into Ethereum ETFs. Key indicators such as trading volume, market sentiment, and institutional activity will be crucial in determining the market's trajectory. A sustained increase in institutional investment could lead to a fundamental shift in market dynamics, potentially elevating Ethereum to a leadership position alongside Bitcoin. This transformation could reshape investor strategies and influence regulatory discussions surrounding cryptocurrencies. As we ponder the future of crypto in light of these developments, one question remains: will institutional interest in Ethereum catalyze a transformative shift in the cryptocurrency landscape? The next few weeks will be critical in answering this question, as both Bitcoin and Ethereum navigate an evolving market influenced by institutional strategies and investor sentiment, setting the stage for potential breakthroughs in the coming months. The current surge in Bitcoin and Ethereum prices can be traced back to several key developments in the cryptocurrency market over recent months. Bitcoin has been steadily pushing into new price territory, reaching levels not seen since its last major bull run in late 2017. This upward trajectory has fostered an improved risk appetite among investors who are increasingly willing to engage with digital assets. Concurrently, Ethereum has shown remarkable strength, trading near its record highs, with reports indicating that an impressive 97% of Ethereum holders are currently in profit. This robust performance has contributed to a positive narrative around Ethereum, prompting institutions to view it as a viable allocation vehicle. The record-breaking ETF inflow day appears to have reinforced this sentiment, indicating that institutions are not merely seeking exposure to cryptocurrencies, but are increasingly opting for Ethereum as a strategic investment choice. This shift is reminiscent of previous market cycles where a single asset, like Bitcoin, led the charge, resulting in a broader market rally that included altcoins. However, the current environment is distinct. Institutions are showing a stronger preference for diversified exposure, which could reshape traditional market dynamics. The growing involvement of institutional players, including hedge funds and pension funds, suggests a shift toward mainstream acceptance of digital assets. Increased institutional investment could lead to greater legitimacy for cryptocurrencies, potentially attracting even more retail investors. As the market matures, we may witness a continued upward trend in digital asset prices, driven by sustained institutional interest and a broader acceptance of cryptocurrencies in traditional financial frameworks. The evolving landscape indicates that both Bitcoin and Ethereum could play pivotal roles in shaping future investment strategies, particularly as regulatory clarity emerges and technological advancements continue to enhance their usability and security. The recent developments in Bitcoin and Ethereum have significant implications for the cryptocurrency market and investors alike. Notably, the substantial inflow into Ethereum exchange-traded funds, or ETFs, marks a pivotal shift towards institutional investment in the cryptocurrency space. This surge indicates a growing appetite for exposure to Ethereum beyond Bitcoin, suggesting that larger financial entities are beginning to recognize Ethereum's potential as a valuable asset class. Historically, Bitcoin has been the dominant player in the market, but this emerging trend could bolster Ethereum's market position, enhancing its price stability and attracting more investors. The inflow of capital into the Ethereum ecosystem is particularly important as it may support its relative strength against Bitcoin. This could foster growth in decentralized finance, or DeFi, applications and Layer 2 solutions, which aim to improve the scalability and efficiency of blockchain networks. As Ethereum continues to evolve and expand its use cases, the demand for its assets is likely to increase, potentially leading to a more robust and diversified market. Furthermore, this diversification could mitigate risks associated with heavy reliance on Bitcoin's performance, which has historically dominated market sentiment. Bitcoin's recent price stabilization has drawn renewed interest across the entire cryptocurrency market, prompting investors to reconsider their positions in altcoins. This capital rotation is essential for diversifying investments within the sector, reducing reliance on Bitcoin alone for overall market performance. The influx of institutional capital often reflects long-term strategic investments by professional investors, which can help stabilize market fluctuations and encourage sustained growth. Understanding these dynamics is crucial for both seasoned and average investors, as they highlight the evolving landscape of cryptocurrency and the increasing involvement of institutional players. Looking ahead, the continued growth of Ethereum ETFs and the broader acceptance of decentralized finance solutions could shape the future of the cryptocurrency market. As institutional adoption of Ethereum accelerates, it may pave the way for enhanced regulatory clarity and greater integration into traditional finance. Investors should closely monitor these trends, as they may signal a transformative phase for digital assets, leading to greater mainstream adoption and integration into financial systems worldwide. The next few months will be critical in determining how these developments unfold in the rapidly evolving cryptocurrency landscape. On June 8, 2026, Bitcoin briefly touched an unprecedented price of $122,800, marking a significant milestone in its ongoing rally. This surge occurred amidst a broader trend in the cryptocurrency market, where total market capitalization climbed to $4.13 trillion. The recent price jump is part of a series of bullish movements that began several months ago, fueled by increasing institutional adoption and growing mainstream acceptance. Major financial institutions have begun integrating cryptocurrency into their portfolios, signaling a shift in traditional finance. Notably, Ethereum exchange-traded funds, ETFs, experienced an inflow of over $1 billion in a single day, making it the largest single-day investment recorded in the sector. This influx pushed total assets in Ethereum ETFs beyond $10 billion, highlighting a growing confidence among investors in the second-largest cryptocurrency. The Fear and Greed Index, a measure of market sentiment, also reflected a positive shift, rising to 63, indicating that investor optimism is on the rise. Positive sentiment is crucial as it often influences trading behavior, prompting more participants to enter the market. Interestingly, while Bitcoin led the headlines with its price surge, altcoins such as Solana and Dogecoin demonstrated even stronger performance on a percentage basis. Solana, known for its high throughput and low transaction fees, has gained significant traction, while Dogecoin continues to benefit from its strong community backing and celebrity endorsements. This divergence indicates a potential rotation of capital within the cryptocurrency sector, suggesting that while Bitcoin is capturing attention, investors are also exploring opportunities in the altcoin space. The impact of this capital rotation could lead to increased volatility as investors shift their focus from Bitcoin to emerging projects. Additionally, regulatory developments are looming on the horizon, with governments worldwide contemplating frameworks for cryptocurrency regulation, which could further influence market dynamics. Looking ahead, analysts predict that the momentum may continue, particularly as more institutional players enter the market. The growing popularity of blockchain technology and decentralized finance may also drive further investment in cryptocurrencies. As the market evolves, the interplay between Bitcoin and altcoins will be crucial in shaping the future landscape of digital assets, possibly leading to transformative changes in investment strategies. As we contemplate the uncertain future of the cryptocurrency market, what do you think will happen next? Will institutional interest in Ethereum truly reshape the landscape? Share your thoughts in the comments and subscribe for daily deep dives.